is Dave Neugart. I've been a local resident of the Temecula Valley since 1999. I moved here and decided to open up a new boutique practice. My emphasis is financial tax planning for the small business owner. I have clients in 37 states, 7 different countries. I speak 2 languages very well, of course, English and Spanish being the other one. My background is I started off in the financial industries, in the insurance realm, went to school, continued on with my academia, received my property and casualty life insurance licenses, parlayed that into the financial services through securities industry, and then ultimately received this designation as an IRS enrolled agent, which gives me the authorization to represent clients and businesses in all 50 states and all U.S. possessions for various tax matters, both federally and statutorily. I've taken this emphasis really to deal with the small business owner for a myriad of reasons, mainly because I don't think that people lack the passion to become a business owner. I think based off of some of the structurization within the different states and federally, you can get lost in a myriad of paperwork and you might step on landmines, and later trying to figure that out can be daunting at best. So what I'd really like to do, and where I find my passion, is finding that young entrepreneur who has this passion and it's just unbridled and you want to just see it grow, but you just want to make sure that they do it in such a manner that they don't get themselves into some hot water. I wanted to talk today about a couple things that as small business owners we can do to help this idea that we're given a rule book on how to run our business is kind of an oxymoron for an individual who's decided to do it their own way, and I can appreciate that. However, with all that being said, there are advantages that we as business owners have unlike those that work in other facets, and so what I try to do is capitalize on those advantages to even the playing field, because oftentimes we hear why is it the IRS is always after the small businessman? Don't they know we put it all on the line? Don't they know it's our bank account? Don't they know we are not eating today so we can pay our employee tomorrow? And don't they understand? And the idea is maybe, but probably not. So what I try to do is to find out what they're doing so that it can all work. And sometimes that's figuring out what their margins are, or making sure that they're doing what they should be doing and maximizing this rule book in their favor. So I wanted to talk today about a couple things that as small business owners you can do to more fully take advantage of this opportunity to be a small business owner. The first one I want to talk about is a home office. A lot of people hear about a home office, some of us have a computer, some of us work at home, but really don't understand what a home office is. It's really a distinct area within your home that is used for that purpose of running your business. We don't need to have a 200 square foot area. It literally could be a chair and a computer credenza, and that can be our home office. It is a distinct area used to perform services that we perform in our business. By having a home office, we're able to take advantage of not only deducting some of those direct expenses of having a home office, but some of those indirect expenses like utilities, electric, gas, water, some of those other expenses that normally when you work as a W-2 wage earner, you're not able to do. And so these are some of the things we're able to do to help maximize that role as a small business owner. One of the biggest things is this idea of depreciation. The IRS will allow you to literally depreciate a portion of your home office for that purpose of running your business, as if you have a satellite office. So instead of having to run out and try to, have to lease payments, your house that you already own can be that home office. And let me back up and also say that you don't need to own your home to have a home office. You literally can deduct those rent payments as a portion of that home office. And the way that that's determined is we literally take the square footage of your home, we take the square footage of that area dedicated as a home office, and we divide the two to figure out the percentage of all those indirect expenses that we can take. Some things that get left on the table are things like storage in garages that can also be used. So sometimes it may not even be that direct space where we're working, but some of those other spaces that we're storing stuff in off-site can be used as well. The next thing I wanted to talk on is technology. With technology changing so greatly, almost on an annual basis, oftentimes people are wanting to know, like, when do they upgrade, how long do they upgrade, how long is something good for, and what the Internal Revenue has done, literally, is within this huge rule book, they've determined that everything has a life value. Everything from this chair, to this podium, to this iPad, to everything you see and touch. And they've done that so that they can determine what that useful life value is of these certain items. And that way, instead of them saying, you're going to buy a $1,000 desktop computer for your office, and we're going to take that $1,000 and deduct it from $1,000 of services so that we end up with a zero net, they're going to say that that computer has a useful life value of 5 years, so we can depreciate $200 a year against that $1,000, so we end up with an $800 net. So they're trying to even it out a little bit. Well, when you do that, there are specific things you can get involved with the Internal Revenue Service called a Section 179. And this is very important as a small business owner because this year, rules have completely changed. Up until this year, January 1st of this year, we were able to take up to $500,000 of expenses against the business for literally going out and growing that business. Well, barring any congressional changes at this moment, this has all dropped down to $25,000. That's big, because now I have small business owners deciding, Dave, do I go through and make this expense? And I have to tell them, if we make that expense, we cannot take up to this $500,000 threshold against $500,000 of income. We're going to have to depreciate that out. So now tax planning becomes very important, because now we're going to end up with a much larger gross. And so now we got to see what this depreciation looks like. And this is where it gets very important to deal with professionals that really understand this, because our tax system is set up in such a way that there's a sweet spot as a small business owner if you have set yourself up into an entity such as an LLC, a corporation, or a partnership, that there's this 35% tax bracket that falls in the window of about 85% of all business returns filed. And we want to see if there's a way that we can either get outside of that one way or the other. And with this Section 179 dropping all the way down from $500,000 to $25,000, I've done extensive business planning right now, running this both ways, because literally we have till December 31st to make this retroactive. And there's a lot of petitioning going on, and there's a lot of ideas being swirled around to our congressmen and women to let them know, like, this is really tough. We're at a transition here in our economy. Do we pull the trigger on some of these expenses, or do we just kind of wait and see what you want to think? And so there's this real apprehension right now of what to do in the business place, and that's where I see the small business owners trying to work with individuals like myself. What do we do next? And at this point, we really are running those projections to give them that idea of what would happen one way or the other, so that they can make some of those determinations regarding much larger purchases, especially as it relates to technology, software, and things of that nature.